On this episode of Location Cubed, Howard talks about fast facts from his recent trip to San Antonio. We're joined by Brian Hunt, Vice President of Construction for USI, and we spend time talking about the evolution of risk management. But before we get to that, if you like what you hear, please hack the Like Button's iTunes account and spend time downloading every Michael Bolton and Barry Manilow song that you can find. Howard?
Wow. All right. Well, so I see that you're wearing Johnny Cash socks today.
I am.
And so
the man in black.
When we were in San Antonio, my wife and I took a riverboat cruise, and we learned a few facts. One was that Johnny Cash was actually stationed at an Air Force base, I believe Air Force, in San Antonio when he was younger and met his first wife there.
Okay.
We also learned that the San Antonio River, although it appears to be man-made, is a natural river and is only like 2 or 3 feet deep.
Okay.
And then we also learned that rice and beans is not necessarily an authentic Mexican dish, but that rice was brought over from Asia with all the railroad workers back in the 1800s.
You learned quite a bit on your trip. Now, Brian, did you wear black knowing that Howard was going to start off with some Johnny Cash facts, so you wanted to make this a tribute to the man in black?
No, I'm a big fan of the man in black. I just happen to be like, this is kind of my go-to suit. Okay. Because black is always, stylish and, I try to be part of the times, but it's kind of my go-to.
Cool.
So, yeah.
Well, since you're new on set and introducing to folks for the first time, why don't you give us a little bit of your background and introduction? Tell us a little bit about what USI is and what you do.
Oh, well, first of all, guys, I want to say thank you for allowing me to come out here and talk to you and spread the gospel of risk management, which is, I guess, one of my passionate things. To my point.
I'm going to use that phrase now, the gospel of risk management. I love
Go right ahead.
Yeah, there
Absolutely.
you go.
No. My name is Brian Hunt. I'm born and raised here in Irving, Texas. I am one of the few guys actually from here. Longtime resident, attended Southwestern University down in Georgetown, Texas, where I received my bachelor's. Studied accounting and political science. Did my way through accounting most of my life, and then I would say the bulk of my life has been doing insurance or risk management, one facet or the other. I started off, maybe sort of like saying I was a forensic accountant, where I used to do claims analysis of property damage on the back end. So analyzing a property damage in what we call the time element result, property lost income, business interruption that results. From there, I did forensic. I was actually forensic accountant again I did internal investigations for EDS. So I was doing a lot of sort of white collar crime, embezzlement, fraud, that kind of stuff. I'll be looking internal investigations for EDS. I used to make the joke, we have at the time, we had 150,000 people working around the world. Somebody's going to try to rip you off. And so, that was an interesting environment. I got to travel the country and the world a little bit. And from there, I went to FM Global, where at FM Global, people don't know, it's the world's largest commercial insurance carrier. At that time, we had developed a firm that was mainly a sort of forensic finance guys like myself to help clients understand what their exposures might be before events actually occurred. And as we've all kind of seen now in the past couple of years with supply chain interruptions and pandemics, things that you didn't necessarily think about can happen and impact your bottom line. From there, went over to work general construction and Austin Industries. Learned a lot about construction in a short amount of time. From there, went to Aon. It was Aon's Construction Services Group, where I was an account executive and chief administration officer for 5 years. And then recently, I've been moved over to USI, which is, most people don't know, we are the 7th largest commercial insurance brokerage in the country, 8,500 employees around the United States. And I specialize specifically in helping clients through the risk transfer programs for construction and real estate. So,
Great. Sounds like you've had a few more as many experiences as Rob, different companies. So you've been doing this for quite a while.
Yes.
So how has risk management changed or evolved over the years? Thinking back to when you first started to kind of where we are now.
No, I'm thinking I would go back to say when I started at FM Global, it was a prime time. When we started that firm, I was for a consulting firm within FM. It was all about trying to help clients understand their exposures before the event occurs. I think prior to that, in insurance world, people think it's like, you buy insurance, you do the renewal, broker takes you to golf, see you next year. And then along that lines, one of my favorite podcast hosts, Scott Galloway, Professor Scott, Prof G, he had a quote recently, about, because he was making he made the observation that, a lot of people in insurance, they make pretty good money, but they're not very smart. And I took that a little bit of an insult, but then I stopped and thought about it. I go, no, that's kind of almost, I would say, the old way of doing insurance and risk management. It's it's transactional. You place insurance. Yeah, I've got coverage. I got a COI to show my owner. Let me move on. But I think as we've evolved over the years, Katrina, Rita, Sarbanes-Oxley, the events of her tsunamis that knock out supply chain in Thailand, and all that sort of ripples around the world. Now we've seen, pandemics, as a result, how that's played in supply chain, shifting demographics. There are a lot of things that can go bump in the middle of the night that people don't realize that go beyond insurance. So it's really more of a question of, yes, it's good to have insurance, but do you really understand what could go wrong? And are you looking at enterprise holistically, enterprise risk management at a holistic level? And that's why I would say risk management has evolved. It needs to be holistic. It needs to be sort of overarching. What are the things that could go wrong at your firm that are not just specific to insurance?
Are there any specific events that you think folks should be thinking about? And no one thought about a pandemic.
Yeah.
A lot of folks didn't think about
Except for Bill Gates.
Except for Bill Gates.
Yep.
Some of the supply chain issues that
Yeah.
we're having.
Yeah.
Are there things that kind of keep you awake and say, hey, this is a possibility, this could happen, but folks just aren't thinking about it?
No, and I'll take you to a point just to show how exciting my life has been. I was about, say, 5 years ago. I was at a disaster recovery conference for guys like me who think about the worst case. And at that time, there was a head of infectious diseases for Yale School of Medicine talked to us about pandemics. And the pandemic that people still haven't thought about yet, that hasn't happened yet, if the mutation of the flu occurs to the point your body doesn't recognize. That's what people have been thinking about. So to your point, there have always been people out there talking about it, but what I think people have done a poor job over the years is understand the risk, but then how do you quantify the risk? So like you tell me that supply chain disruption is going to occur, but what does that actually mean to the bottom line? And that's where I think as evolved or needs to occur, you need to think about your risk and not just say low, medium, high risk to your operations, but specifically what is your plan if the worst case situation occurs? Maybe it's not that difficult to mitigate, but as I think we've all seen right now in construction, which is more of an extenuation of what's occurred over the years of globalization, you put too much concentration on, say, how you lived in China. A lot of manufacturers out of China, great, but what happens if the labor can't go to the factories, it's shut down, or you can't get it on a container.
Right.
You can't get over, so there's, to the point, you need to think about your weakest link in your chains and think about what is the plan if it goes wrong. And so like, obviously now pandemics on people's mind. One of the things I always say, okay, what do you do if you, like we're starting to see with cyber attacks, how do you react if your IT system goes down? What do you do if, say, your key employees, God forbid, go into a plane crash? How do you resume operations?
Right. But how do you train someone or train a company to think like that? Because you think about, you mentioned the supply chain, and it's like, okay, so because of the pandemic and then because of the supply chain and the chips, used car prices went through the roof.
Correct.
Who would have thought, okay, there could be a pandemic and used car prices are going to go through the roof. How do we deal with that?
Yeah.
I mean, how do you get to, there's so much randomness with what could happen, but how does someone kind of get trained to be able to think in that regard, to be able to make those decisions or to be prepared for that?
Yeah, and I think the point is, I think whether it be someone you pair up, I would strongly argue that your broker should not just be someone who's transactionally giving you a policy and walks away. You need to have trusted risk advisors who are going to be with you and sort of really part of your team, for lack of better reference, in the sense that, end of the day, as I tell my clients, it is not my job to tell you what you want to hear. It's my job to tell you what you need to hear. Now, at that point, you can make an informed decision. You can't, if you really want to be risk averse, you stay in your room and you never leave, right? But then business unto itself is taking a risk.
But don't you need to have a risk advisor that's thinking, to Howard's point, outside the box a little bit? You can't just be thinking about what are your risks and exposures as it relates to your local market in Dallas-Fort Worth. What happens if there is a global conflict somewhere, or even a regional conflict that is going to interrupt your supply chain? So we've been talking about that in terms of the pandemic and what happens if a specific manufacturing region in China shuts down because of a new mutation of COVID. But who saw coming? Well, there's going to be potentially a war in Ukraine that's not just going to impact fuel prices. It's going to impact the production of corn, the production of peanuts, the production of other food staples that are going to ripple through the economy. Did folks see that? Who knows whether they did or didn't, but don't you need a risk advisor, I think more like you, who's thinking about things in a more global context, not just thinking about Dallas-Fort Worth?
And before you respond to that, I want to add to that commentary is, how do you insure for that? If you even insure for that.
Can you insure for that?
Well, and that's to a great point. So, this is a great conversation. So to take that last second, insurance is, people say is like, before I got into insurance, I thought, oh, it's boring, stodgy, why would I want to do that? I find insurance to be fascinating in the sense because if something goes wrong in the marketplace or something in the economy, insurance is one of the first industries to try to come up with a solution for it. And one of the things that has evolved over the years is the brand new insurance policies or mechanisms to do risk transfer. And a quick example is that, like, one of the big things for construction world that we've always had an issue with is how do you deal with weather delays? I mean, we've had no rain forever.
We actually might have some weather today.
Well, and I think all the general contractors in Texas would be happy to get this rain for a day. Everybody would get rain. But so like a couple years ago, we were having a lot of rain that was causing delays, and that goes into liquefied damages and overruns. You can't necessarily insure that because you, like say you have a contract and you have liquefied damage if you don't hit the target date. Well, in the United States, you can't insure against liquefied damage because it's like insuring yourself for, like, say, I'm a screw up, therefore I get insurance on the backside. But with I would say the use of large data and technology, you can now place like parametric coverages on certain types of events. And so that, like, say, if you're concerned, you got a job site in Texas and you've recognized, say, 30 days of 1-inch rain over the course of your job build, that's probably gonna have delays and overruns and mobilization costs you didn't have in your budget. A parametric coverage would trigger. You can design it. It's like if you go beyond 30 days of 1-inch rain, then you can start getting a payout every time it rains another 1 inch. And so that's the kind of thing that's evolved over the years in the sense that there are new ways to try to transfer some of that risk. In the day, you can't insure everything because if you insured everything, the cost of premiums would be so prohibitive. Then why you open your business? So there is a question. There's always going to be risk you can retain, but there are new ways to try to transfer some of that things. Even like now, there are ways. And I wanted to sell this company. There are now like tradable, I guess I say policy, like say, if you're concerned if a hurricane hits through New Orleans, you can place an option, yes or no, and then if you can structure the payout. If say a scale 2 hurricane goes through like New Orleans, you could get a payout because that could impact your supply chain, your sales, whatever the case may be.
So I don't want to go too dark here, but I have a question, and it's driven by something that I actually read and saw in the mainstream news over the weekend. City of New York put out a video instructing residents. I don't know if you saw this, Howard.
I saw this.
It actually kind of put chills on my back a little bit. How to respond in the event of a nuclear crisis. So that's a small weapon dedicated somewhere in a major metropolitan area or a larger airburst nuclear strike. I can't believe it's 2022 and we're talking about that again. But that's on the minds of folks. I mean, is that, I hate to ask the question, but is that an insurable risk, or is that one of those things that you say, look, I mean, that is the remotest of the remote. We can't insure against everything.
Well, I mean, not to go far into the gray, but like there are typically exclusions, like say for war exclusions. And now a lot of time a nuclear explosion might be considered a war exclusion, but the resulting fire, that could be insured. But no, to your point, that's like say in the government, FEMA, higher echelons, they're constantly doing role playing or worst case scenarios.
War game studies, things like that.
And I would say, it's unfortunate the way Putin has basically become a Bond villain now, unfortunately, that's brought about the concern of nuclear weapons. But still the material's always been out there that the concern of a nest team would always be concerned about a dirty bomb or even a nuclear bomb. The fact that you had to do that I saw the news, and people probably got a little scared about it, but that's also kind of what governments need to do and inform the citizens, like to think, you gotta have a plan for the worst case. And I'll give you an example. This past couple of days, we've been getting notices from ERCOT about we might have to have rolling blackouts. So we all experienced that a couple of years ago, where Texas lost 5 days of power, which is, that's another story. Having lived in the Northeast in high school, I've seen my house not have power for 10 days. That's why I live here. I don't want to do that, But, I mean, to the point, to talk about resiliency, one of the things I did was I didn't buy a gas-powered generator, but I do have what's called basically one large rechargeable battery. That for a number of days, I could run my refrigerator on and off for 4 hours. I could, put a light on, do the toaster, have some basic function of civilization. Because hopefully, I will never have to use it.
Well, you didn't need it for the refrigerator. You just had to open the door.
Well, let's say it happened tomorrow with our power structure. But the fact is, like, you need to think about the worst and plan for. Think about the worst, plan for the best. Does it mean you have to build a nuclear fallout shelter in your backyard? I'd probably rather go up in the fire in the first place. But to have, like, say, personally, do you have water in your house that you can get access to, dried food for a couple of days. I mean, that sounds kind of like crazy in this modern world.
See, Howard knows I do. He's looking at me because he's coming to my house.
I do.
I know that.
Yeah.
So we have gas in the car.
And now you are too.
No, I mean, I do because you think about things holistically. Take it back from like nuclear war or even bomb. One of the largest, scariest books I've read recently was a book written called This Is How They Tell Me the World's Gonna End. And the woman who did it covered the whole hacking community for the New York Times for like 20 years. So she wrote this entire book about the beginning of the hacking community to where it is now, zero-day hacks, the presence of nation states who have collected these zero-day hacks and are ready to deploy them when they want to. I mean, I guess one of the biggest concerns when the Russian invasion occurred was, were the Russians going to start deploying attacks on our system? And that still could happen, and we're going to probably attack them. So and I would always tell my clients, anybody, you got to have a plan to withstand, say, 5 to 10 days of no power, no telecommunications, no electricity, and no water. I mean, because that is what we've gotten to this point. We were so exposed from a cyber perspective, Internet of Things, all that can happen. And I'm telling you, I'm not just making this stuff up. It's a very incredible book. There are concerns that if the Russians, the Chinese, North Koreans decided to go, active on this, we would see widespread, decimation of our infrastructure, and that has to be part of someone's plan.
Right.
I mean, like again, you don't have to be all like survivalist, but you got to be able to survive, 5 to 10 days.
Well, and you think about, infrastructure, the grid and things like that, it's not just an attack on those systems, it's the failure to be able to maintain those systems.
Correct.
Can we get the spare parts?
Yeah.
When I'm having, trouble getting, spare parts for a basic automobile, God forbid we have, trouble getting spare parts for, turbines and generators and substations.
Yeah.
That to me is really the risk. It does to a certain extent come back to supply chain and our reliance upon, third-party producers to provide those parts for us. But I think it's a very real risk as well.
And go ahead. I know, but say it. Go ahead.
No, keep going, because I want to just kind of summarize one thing. Is basically, but the key, you said this a little bit earlier, is, can you insure it? Should you insure it? We also have to keep remembering, to the point of risk management versus risk transfer, risk avoidance, et cetera, and that it's not always just how do you, awareness is probably bigger than almost anything else in this whole conversation.
No, and it goes back, in order to make an informed decision, you need to have solid data.
Yeah.
And if you're not making a decision without data or input, how extreme or concerned this risk might be, then you might be making the wrong decision on behalf of yourself, your family, and your firm.
Well, you made the point earlier, Howard. How do you get into that mindset of just thinking about it? Maybe that's the first step in the battle, is knowing that I have to even consider these risks. And hopefully folks watching this, it's not all gloom and doom. Hopefully they just took some thought bubbles out of this to say, hey, maybe we do need to look at our risk management plan in more detail, have that 5-10 days of no power, no telecommunications, and understanding we have to have an alternative plan in place to deal with that.
Well, I think you start by not hiring a bunch of accountants, because we're still looking at 2021.
I think you might be a few years beyond that. It seems more sometimes like the 80s. We need to live in 2022 or 2025, more importantly. That's how we need to make our decisions.
Exactly.
And add that I am a CPA too. So.
Another fun fact we didn't know.
Yeah, exactly.
Yeah,
it's full of fun facts.
But you fulfilled the dream of every accountant.
Oh, exactly.
Which is to no longer be an accountant.
I thought you were going to say to go into risk management.
Just anything not being an accountant.
So as sort of a teaser for another upcoming episode that we're going to have talking about economic conditions, talk about what you're seeing just in construction economy right now, DFW and perhaps nationally. What do you think happens for the second half of 22? What do we look like going into 2023?
Yeah, it's a good point. So let's kind of take it back to even like when the pandemic started, even before that. During the Great Recession, at least in Texas, and we were talking about this earlier, obviously the nation got hit hard, and there were sections like Florida, Southern California that really took it in the teeth, real estate. North Texas, I would say Texas overall, I think kept their head above water. There was still an influx of people who were coming in. And then also, like we were talking about, say, during having lived here in the Great Savings and Loans debacle, they were lending money out to anybody, And since that time, the state at least to her benefit, put in more tighter restrictions for underwriting, for providing loans. So when you had, like, say, in Florida, the liar loans and, getting, like, financing and getting cash on top of that, like, this crazy stuff, right? Texas is a little more restrictive in the sense that, so you had, obviously, liquidations in people going default, but not to the level of other states. And so we kept our head above water. Also, as a result, during that Great Recession, just so many people left construction. I mean, like home builders got out, multifamily got out, and people who actually worked construction got out. Because I make this joke about, people say that's really a joke, but you think about why is it you can't find the people who want to do labor in construction? Well, I'll give you two parts. One, statistically, you're more likely to die on a job site than you are in law enforcement. So wrap your brain around that. Do I really want to do this every day? Two, rightly or wrongly, we've had crackdown on immigration in the sense that that's been a stable source of labor. I'll let you guys figure that out yourself. But you take those two parts, you got few people in the labor pool. Then, as we all kind of saw, Austin, Dallas, San Antonio, things start really getting hot, 5 years ago, 7 years ago. Pandemic hits, multiple things happen. People want to get out of the large cities, the New York, Southern California, Chicago's, and they're coming here in droves. So they're coming here in droves, which is bringing up demand for distribution, warehousing, e-commerce, all these things. Even housing has had to catch up. There's still a lack of housing in North Texas where it should have been on the trend line. So there's still plenty of demand for homes. And then obviously you take into account the issues we've all, it's impacting the entire industry as far as supply chain occurred out of Southern Asia, what in the case, and still not enough labor to do the job. So delays, taking forever to get your home, and then during COVID, obviously getting permits out of this city was difficult as well. So I say you mix that all to a stew, hence you've had these problems. Fast forward to where we are now, supply chain's starting to come back up, but now we're starting to see more lockdowns in China, so that could be an issue. Labor is interesting, it's still tough to find people. But now what's going to be interesting to see is that now rates are coming back up. And people say, well, rates, it's going to kill the economy. Well, I go, wait a minute. I bought my house roughly 25 years ago in Dallas. I had good credit, everything was great. 6.5% on my 30-year note, And I was having a conversation with the owner of a general contractor here, $600 million general contractor. He bought his house, maybe a couple years before me, 8%. That was normal, And we've had all these years of quantitative easing by the Fed who pressed down rates to be not natural. So now we're trying to, like any sort of, take up a macro book in economics. You're printing money, it's inflationary. And because you're devaluing the money, so prices go up. Now, we've got a lot of factors going inflation, but rates are going to come up, as they should, because if you're going to be a natural rate, get it, say, closer to 4.5, 5, 6. Yeah. Now, that's obviously going to cool some water on housing, because obviously you add interest rates, all things equal, your house payment's going to go up, so some people may not be able to afford certain homes, but then at the same time, people should overextending themselves. Same time, some commercial projects are starting to be put on the shelf, talking to some of my contacts in construction, because if a developer is looking at a pro forma and he had anticipated 2.5% interest rate on the loan, and now he's looking at 6, might be a little different.
Right.
But then that is not necessarily a bad thing. It's been so hot, running so hot here, a little normalcy may not be a bad thing.
Right.
So in my mind, pulling back a little bit off the gas would probably be a smart thing rather than to keep on chugging and going. So that's kind of where we're standing in the sense that we're seeing, local level, Texas, North Texas, throughout, say, Texas, it's still there's still plenty of activity. You're still having semiconductor manufacturing occurring. TI is putting $40 billion up in Sherman. Samsung's putting 15 down in Taylor.
Another one going up in Sherman as well.
Correct. Yeah. So there's still plenty to be done.
Yeah.
Other parts of the country, we are starting to see, at least my residential standpoint, cancellation on contracts from a residential standpoint, which kind of probably makes a little sense. Again, if the rate you're anticipating was 2.5 to finance your mortgage, and now you're going to 5 or 6, you probably need to put that off for a while. So I would say overall, there's going to be a slowdown, but not to the point where it's like the Great Recession as it was again. I think it's going to get anything back to some normalcy, so that we're not having these long extended periods on construction projects because of not enough labor or the subs are overextended. To that point, one thing we are starting to see problems amongst the subcontractor base as far as, and I always say this from a surety standpoint, there's 2 times surety underwriters get concerned: when things are great and when things are bad. And when things are great, these guys, those subcontractors, I love them, they start doing well and they overextend themselves, they take on jobs they shouldn't, or they're buying that ranch or that plane they shouldn't, and then when they can slow down, now they're stuck with these fixed assets they can't unload, and they have a hard time with cash, controlling cash. That, unfortunately, we're starting to see. But then Darwinian economics suggests that we should get rid of some of the slower gazelles and let the stronger ones win. So,
You've been listening to Location Cubed. Big thank you to Brian Hunt, Vice President of Construction for USI. Thanks for joining us and talking about risk management.
it's been a pleasure.
If you like what you heard, just a reminder, please hack the Like Button's iTunes account and download every Michael Bolton and Barry Manilow song that you can find. You listened to Location Cubed.